Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started. Good morning. Today is Wednesday, September 1st, 2010. The markets are most decidedly relieved to have left the month of August behind us as we start September here. Today we're talking about Hello September. Last month was a tough month for stocks and commodities as well as the risk currencies, and we saw some dollar strength and yen strength as risk aversion was the theme of the month. But this morning we've got some risk taking on the table as stock markets around the globe were all higher. U.S. stock market just opened higher as well. Okay, and we've got some risk taking going on in the market. Now, the major catalyst behind this move happened overnight as Australian GDP figures came in much better than expected. All right, they also got Chinese PMI figures, which showed a return to growth for the first time in 3 months. Now, this shows that China still has upward growth, although it's slowing. Now, auto purchases in China were also higher, showing that there is still some demand going on. So, just taking a quick look here at the chart of Aussie USD. Here you can see that's made a nice move higher. We're on a 2-hour chart. If you look back here, you can just see on the Fibonacci retracement that price came in and it looks like it held the 61.8% level before bouncing higher. A lot of that is a result of the news coming from China and also in Australia. All right, the Australia reported GDP growth of 1.2% versus 0.9% and year-over-year growth of 3.3% versus an expectation of 2.8%. All right, that's the fastest growth pace in nearly 3 years. Okay, and as we know, as China grows, demand for Australian raw materials also grows. So as long as China's growing, that's a good sign for the Aussie. Now, we also had overnight, we had some PMI figures come out from the Eurozone. Okay, those came in as expected, slightly better. Wasn't really a big deal. But we did see that there were German retail sales fell off a little bit. So we're going to have to keep an eye on the German economy and what's happening over there. But, don't lose sight of the fact that Germany is primarily an export-driven economy. So, if the domestic demand wanes there a little bit, it may not be that big of a deal. Also, Portugal came out, had a debt offering, and it went off without a hitch. So, things, obviously aren't, fantastic over in Europe, but they're hanging in there, and they seem to be doing pretty well. Now, conversely, we've got here in the let's take a look at Euro Pound. We had PMI figures come out in the UK, and they came in worse than expected. All right, so you can see the difference here between the euro and the pound, and you can see the euro's catching a bid versus pound. Pound may see some declines going forward as the austerity measures begin to kick in over there in the UK. So we're going to have to keep an eye on the pound, see what's happening there. Lastly, I just want to talk about, let's take a look at dollar yen. Looks like it's bounced back. Let's look at this on the, 5-minute chart. Let's just see what's happening here. All right, right here we saw 8:15. This was the ADP jobs report, which came in here in the U.S. that showed we had a decline of 10,000 jobs. There was an expectation that we would actually gain 15,000 jobs. So, this may be a harbinger of Friday's non-farm payrolls report, which is, an important report here for the U.S. economy because it shows if the economy is really adding jobs. But as you can see here, this little move lower is near the 15-year highs that were put in last week, and it looks like the market's going to try and test the resolve of Japanese policymakers to see if they're really going to follow through with their threats of intervention. Now, here in the U.S., we have ISM manufacturing figures due out at 10 o'clock, and that could, show if we've got any further weakness, or if a surprise number comes in, perhaps it's going to be good for the market. So 10 o'clock may be a turning point for the market. We're decidedly in risk-taking right now, but that could induce a little bit of risk aversion. All right, so what this goes to show is that, it's not always about what's going on here in the U.S. and that, there are still some good growth stories going on around the globe. And, I'm speaking about Australia. We know, how China's moving along. So, right now the economic data here in the U.S. looks pretty weak. And that's really been the catalyst holding the dollar higher. It's risk aversion. It's not because people want to be in the dollar or they think the economy's doing well here. That's far from the case. We also got some encouraging news yesterday from the Fed minutes, which showed that they may not be so quick to do any further quantitative easing. Now, that's going to be seen as a good thing for the market because right now the focus is on debt reduction. Further quantitative easing would add to deficits, and it would view people would view that the economy in the U.S. really is worse than expected. So a little bit of a confidence play there. We'll have to see what happens with that, but. Other economies around the globe are slashing deficits, or at least attempting to, and unless the U.S. follows suit, they're really, the U.S. could be in trouble from a global standpoint. But this week, it's really all about manufacturing and the jobs numbers. We had that ADP number this morning, which disappointed, and then we also have initial jobless claims tomorrow, followed by non-farm payrolls on Friday, which is the granddaddy of all the reports. And I just can't impress this enough that I don't know why the government doesn't see it, but it's all about jobs. And if people aren't working, then they're not confident, they're not spending money. If they're not spending money, then the economy is not growing, because consumer spending here in the U.S. represents some 2/3 of U.S. GDP. And part of the reason why people can't find jobs is because companies aren't hiring. Now, companies aren't hiring due to current government policy. All right, companies are afraid of what's coming down the pike as far as taxes go, further financial regulation, this new health care bill, and there's just way too much uncertainty right now. So, while the government's on this path to attempt to right the wrongs of the past, they're really leaving a lot of people hanging out to dry here because they can't find jobs. And for the guy on Main Street who was very angry at Wall Street and, couldn't believe the bonuses and all this other stuff, something tells me that right about now, he's not going to care what kind of bonus a CEO makes if the guy's willing to hire him. And that's what it's all about now. It's about, getting people back to work. It's about moving the economy forward. And, unfortunately, those in government can't see it. So, right now, unless, something changes in policy that's going to really affect jobs growth, I don't see this turning out well for the U.S. So that's what we're looking at today. Keep an eye on that 10 a.m. ISM manufacturing number, and good trading to all. As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.